Chocolate bars to laundry detergent, Americans are noticing more products getting smaller while remaining the same price. It is called shrinkflation, and it's a very real corporate practice designed to maximize profits, and it has become an election issue. U.S. President Joe Biden even highlighted it in his State of the Union address earlier in the year. Okay, joining us to talk more about products getting smaller and costs staying the same is Michael Collins. He's the CEO of WinCap Financial and an adjunct faculty member at Endicott College. Michael, thanks very much for taking time to chat with us. Let's kind of get right to it. Shrinkflation. Are voters latching onto this issue, or is this something that perhaps the Biden administration is kind of hoping that they will?
I think it's something more that they are hoping that it will. I mean, there are some trends in the food industry where customers don't want massive amounts of food. They might want smaller portion sizes. So I think that is some of it in play right there.
Yeah, let's talk a little bit more about the junk fees and those other fees that Nathan talked about that are being kind of snuck into our bills. I think people are noticing those as well. So when you add that up with inflation and other costs that are out there, people are very concerned about the amount of money that's coming out of their pocket for all kinds of bills.
I think junk fees are probably the bigger issue, right? Whether you're buying something on Ticketmaster, Airbnb, or a hotel, you know, a lot of people get shocked by the time they go to their shopping cart. The price of what they're buying is going up by 20% because of all these fees that are not transparent to the consumer.
Yeah, and don't even get me going on the airlines right now. Let's talk about the inflation reports that came out this week. Producer Price Index Tuesday, Consumer Price Index on Wednesday. What are your big takeaways from this? And really, what do you think people are reading into this? Because the numbers look okay, but go anywhere and all anyone can talk about is the amount of money they're paying for gas, the amount of money they pay for eggs, milk, bread, everything. It's just really adding up.
Yeah, I mean, the inflation report was pretty good and the markets reacted positively to it. I think the bigger issue is that even if inflation is moderating, the consumer doesn't like the 3% inflation that was stacked on top of the 10% inflation from the year before, right? The average consumer or Main Street doesn't care as much about the economic data as they do about the absolute numbers, which are still quite painful for the consumer.
Now, if you're getting close to retiring or you check out your 401k or any kind of fund that you may have out there, it's been great news recently. Wall Street investors are certainly happy enough. All three indices right now at record highs. Has the market priced in a rate cut?
Yeah, right now the market is pricing in about 2 rate cuts by the end of the year. But another interesting component of this is Wall Street is very focused on the calendar year. I think if we look beyond 2024, we see more rate cuts coming in 2025 as well.
Yeah, but I heard that in 2023 as well. So people are going to toss that back out there as well. If things aren't moving as well as the Fed had hoped, had planned, had told us, look, it could not be out there. We have to think about that.
For sure, and the Fed's been wrong. If you listen to the Fed at the beginning of 2022, they said no rate hikes were coming. And boy, were they wrong.
Yeah, boy, were they wrong. Okay, so what about delayed rate cuts, the things you're talking about? What's that going to mean for the average consumer, the average home buyer? Right now, if you're thinking about buying an average home, it's $400,000, $500,000, $600,000. If you're going to pay 7% interest as opposed to 3% that you could have gotten a number of years ago, that is a huge difference.
For sure, but the economy is really strong and unemployment is really low and the consumer is still very strong. It's almost like the inverse of 2008, but even if you're making more money and wages are up, no one likes higher prices eating into their higher wages. So I think that's the biggest issue is mostly perception around all this.
And I think a lot of people are wondering where the United States is going to be going after November. So let's take all this economic information that we've talked about from shrinkflation to interest rates. What are voters thinking about? And we heard the report coming into you that right now it looks as though people really like the way Trump had managed the economy as opposed to the way Biden's doing it. Do you think that's fair?
Yeah, I mean, I think it's fair. I think we should always remain cautious of polling data.
Yeah.
If you looked at polling data from 2016, Hillary Clinton would be president, right? And that certainly didn't happen. So I think we always have to be really careful about what we see in polling data, and who's reporting on these polls, and where the data is coming from. I will say that leading up to a presidential election, the market usually weakens a little bit, rhyming with the sell in May and going away. Um, and usually the market surges regardless who wins the election, once the outcome is certain.
Yeah, and Biden wants to run on his record of economic moves and also where the economy is right now. And think about it. The United States was supposed to have recession this year. It didn't have it. Things are moving the way the Fed had hoped. We're not seeing any more increases in the prime rate. So why aren't things resonating with Americans right now? Because arguably, the U.S. is doing a lot better than a lot of other countries in managing the global downturn.
It's a phrase that's overused every few years, but we might be in one of the most hated bull markets of all time. You know, people don't care as much about the low unemployment and higher wages when prices are up. People are very focused on that. And then also this huge demographic that, at least temporarily, has been priced out of the housing market, is obviously a huge pain point.
Yeah, we got just a very short time left. Quick answer. If we have a reduction in rates before November, does it help Biden?
It certainly does, right? He might be banking on that.
Okay. We'll get back to you on that, Michael. Always a pleasure. Thanks so much.
Thanks again.